All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 2nd of June. I swear the year is flying by. I appreciate you guys being here, and let's get started. We're going to start with the taco trade. Someone tell me, what does the taco trade stand for? Someone let me know, what does the taco trade stand for? It means something very specific. And I gotta admit, it is funny. It is true. Yes, Trump. Um, always chickens out. The taco trade. We really saw it happen last week. And more often than not, what do our markets do? Drop anywhere from 3 to 10% and then rebound back. All I'm going to say is this is awful. This is awful when, again, some people got out, went to bonds, lost money to the downside, lost money by not being in to the upside, and then lost money on the bonds. I'm shocked. I'm shocked on why people would let their advisors do that. I'm shocked that you're paying your advisor to go to cash. I'd be shocked that you're paying your advisor when it's down towards the bottom to get out because you've lost 20% or 21.3% from the highs to the lows, and then not participate in the way back up. For a couple of you that have spoken to me from other family members or other accounts, that's awful. It's awful that that happens. It's not fair that that happens. And that is somewhat the way the industry is set up. So, taco trade, when it comes down to it, there will be a time when he gets pissed off and tariffs are not coming off. So your key is to be ready for it. That's where it comes. The process of talking with China is currently against their culture. What I mean by that, and this goes all the way back to like the 80, 84 Olympics. When was the Olympics in Brazil? Pretty sure it was the Olympics. Maybe it was the 92 Olympics. Olympics in Brazil. Not the Rio one. Might have been 2016. Maybe it was the soccer cup. I'm not sure what it was, but But one of our American athletes gave the OK sign, where you touch your pointy finger and your middle finger, your three other fingers come up, the OK sign. That was basically giving the Brazilians the middle finger. Might have been a president. I can't remember when it happened, but the short answer is not knowing your culture. In the Chinese culture, if I'm understanding correctly, and no, I'm not an expert, but in the Chinese culture, the underlings, Besant take care of it. The underlings take care of the majority of it, and the presidents knock out the final details and are there for a signature. So the process of talking with China is going against their culture because the underlings do all the work and the presidents finish the minor details and sign. I wonder how much of what our issue with China is not understanding the culture. Japan, not understanding the culture. Not willing to go that extra mile, that extra bit to work on doing things somewhat the way that they do it. It'd be pretty interesting. Two of you sent me the same email. One of you was extremely nice, basically said, hey, just something you might want to be aware of. Another one of you said, see, Kevin, you don't understand the market like you think you do. I found that a little offensive. Thank you to the one of you that said, hey, let me introduce you to something about NVIDIA. And we have this article, Brian Sozi, he makes some comments, he talks about the quarter. A key point that I found is that he thought the estimates were 0.93. And as you go through the article, he basically is saying, hey, NVIDIA is not a stock you want to be in. It's had its run. This is not where you need to be. It falls short of its earnings consensus. It loses China. This is not where you want to be. And I found it very interesting because I also got that same email. Thank you to someone who was very polite and said, hey, just thought you should look at it and know. Yes, I actually subscribe to the same thing. The other one that said, you need to learn your stocks better. I'm going to share an email that I shared. It was actually the same email for a couple different people. But short answer is I made the comment, okay, I also subscribed to the morning brief and your email gave me some food for thought. I wasn't sure how to respond to it, but I wasn't also sure who Brian Sozi was. To be honest with you, my belief is that Yahoo Finance is one of the smaller ones that's out there. Yes, he is very popular in the Yahoo Finance world, does interviews, does all kinds of things. And I really was like, well, to make a long story short, I don't know the guy. I don't know if he's that important. Apparently he was pretty important. So I did some research because, again, I got it myself, made me wonder. Two of you sent this to me. And the comment was the consensus I had for NVIDIA was 73 cents to 76 cents. And then just before earnings, the consensus moved up to 80 cents. Plain and simple, NVIDIA had an 81-cent beat. And they also beat on the bottom line with their revenue pretty convincingly. So I don't understand why this Brian guy thought that the estimate was 93 cents. I pulled some information in here. His own, and this was AI generated, for NVIDIA's April 2025 earnings call, the consensus was 80 cents. It was actually 73 to 76, moved to 80 the day of, with revenue estimate of 43.28 billion. A fact set compiled by Wall Street Forecast include revenue growth of 66% to 43.3 billion. Earnings share growth of 40% to 0.73. Yahoo Finance analysts on average expect the quarterly revenue of 43.28 billion, which was 66% higher over year. Adjusted net income of 20 billion, or 86 cents per share, up from the 15.2 billion or 61 cents a year earlier by Investopedia. So obviously, Yahoo's consensus was higher at 86 per share, 86 cents per share, which again doesn't match what this Brian Sosi guy was talking about. I made the question to the individuals. So here's the question: if they'll continue to make more money and be more profitable in the future with all the crap going on, if you can say yes and you're looking forward to moving with the company you want to invest in. Simple facts. Revenue is 44.1 billion, beat the consensus by roughly about $780 million, up 12% quarter over quarter and 69% year over year. Free cash flow, which makes building and continuing to operate business cheaper. These are the companies you want to be in that don't have to borrow money. 60.853 billion revenue, 24 billion year over year of growth, another 19.894 net income, and free cash flow for the quarter is over 15 billion. These are the companies and the earnings they just reported. One of the comments I want to make to this group, because I know a lot of you have come from the education side, you have to fact check everything right now. The morning brief blew it. Brian, for all intents and purposes, just killed his credibility. I don't know if it was a typo. The 73 cents might have turned into 93 cents on a typo. But for the last 16 to 20 years, you have to fact check everything. Because now even the morning brief from Yahoo Finance seems to be inaccurate and missing the boat by a lot. I made a comment, and it's probably not correct. Don't know if this is a personal vendetta. Don't know if he lost money on short positions, if he's trying to influence the stock to sell off so his positions can become more profitable. What I do know is the morning brief also caught me by surprise. It's the first time that you've seen a pretty negative article on NVIDIA, yet the numbers don't add up. So make sure you're doing your own fact checking. Everything I print and give out to you guys, I've already gone through to check the numbers myself. With all due respect, NVIDIA should be growing because of their data centers. Their cash cow was up 10% quarter over quarter and 70% year over year, even with all the problems in China. That's the company I want to be invested in. I'm going to give you a response to the email. And again, an individual who was polite and just said, hey, I think you want to look at this. Thank you very much. I greatly appreciate it. to the person that was a little rude, you've got to check your numbers and figure it out. Before you're going to send something to someone, you may want to find out if you look like you're foolish or not. Big picture. On one of our economic reports, I don't know how I got this in pink. If someone wants to tell me how to get this out of pink, I would greatly appreciate it. I've tried to highlight part of it and to fill it with different colors. I have no idea what I did, but I did something that won't get the pink off. But consumer spending picked up less than you. In fact, let me find it. Personal income rose 0.8. Personal spending was 0.2. Income is rising to 0.8, and people seem to be saving their money. There is pent-up spending potential, which would thank you, Bill, for that comment, which would suggest we might be coming out of the recession that we've put ourselves into. Are we fully in a recession yet? No, but we also had a negative GDP for the quarter, and it's not looking like it's being any better the second quarter in. 2 negative quarters of GDP is a recession. With that said, because of one economic report for last month's personal spending, personal income, our spending was significant less, 0.02, than our 0.08 income increase. Does that mean that there's spent up potential spending? Not necessarily. It does mean that there's an opportunity. It does mean that for some of us, we have cash on the side. Maybe not everyone sold out a Baidu this last Friday. But there is a year-over-year gain in real disposable personal income, and our spending is going down because of the concern of tariffs. With that said, for most people, there is some amount of savings or cash available that could be deployed. Not only are most people still gainfully employed, they are earning more in real terms. That is the key for discretionary spending activity, along with confidence one has in their job security. Most of us still have our jobs. Unemployment has increased a little bit. It's not to the point that we need to significantly worry. It has increased a little bit. Our biggest concern is how much things will cost throughout summer. Directly, most likely related to China and the European Union on how quickly trade deals can come to pass. With that said, where our market end this week, I thought it was going to be lower. I really thought today would be lower with some follow through, but it was nice to see people bought in, new money came back. Nice to be up, 0.41% when we were flat to down most of the day. Charts, pretty interesting. The Dow Jones Industrial Average, it can't seem to get above the 200. We're through our earnings season. Our next catalyst is going to be news driven on some type of trade progress with countries. For lack of a better term, the Dow has been stagnant for about 3 weeks. Currently cannot get over the 200-day simple moving average, which is at 42,418. Finished today at, well, it closed below it by 113 points, 42,305. Still bullish, but trending stagnant the last 3 weeks. S&P looks very similar, but we're bouncing off of the 200-day. The 200-day is acting as support. More buy orders are in place, but we don't have too much to get to our overbought 70 line. So stagnant. The MACD's been on top of each other. Clear bounce, but definitely we're in a range. Channel based, say 6,000 up top and 5750 down below. A 250 point relatively tight trading range for the S&P 500. Now I want this to disappear. NASDAQ, little bit of the same, but it actually has, it's in the top end of its range right now. Still technically bullish, looks much like the NASDAQ. Kind of interesting though, the NASDAQ is down 0.35 for the year, a third of 1%, whereas the S&P is up a 0.5% for the year. All right, where will the S&P end June 2025? I truly don't have an idea. I'm going to say after a pretty significant up month, which didn't really make up for the down month in April. I'm just going with flat to negative 2%. I do not have a good answer on where I think we're going to go. Earnings. Campbell Soup was up today. Dollar General tomorrow. Dollar Tree on Wednesday. PVH, DocuSign, Vail, and Broadcom after the market closes on Thursday. This is not an earnings week. This is going to be a news-driven week until Friday and our average work week. Really what people are trying to figure out, and we're going to come back to this here, I'm going to assume relatively quickly. Give me a quick second because I should have had it already, but I didn't. June 17th and 18th. We're going to start to hear about a possible rate cut June 17th and 18th. Do I think we're going to get a rate cut? Probably not. Should we get a rate cut? Yes, we should have had it last month. It should probably be one of 2 rate cuts, one now and one in October. Maybe one now, one in December. I don't see the need for 3 rate cuts. But again, dollar late, dollar short, day late. It's just ridiculous that we haven't got a rate cut yet. So we're going to start to see that happening in the near future. Still letting most things run since of their earnings. I haven't gone through and edited this, but I thought it's pretty interesting that Goldman Sachs says these 2 Magnificent 7 stocks offer the most upside. If you were to take a guess, what are those 2 stocks? What do you think those 2 stocks are that Goldman Sachs says, hey, we've got some good upside opportunity there? Kind of cheated because I gave it to a couple of you. Google and Meta and Tesla. Abraham, I actually would have said Google and Meta too. Anyone else want to take a guess which of the Magnificent Seven have this huge upside according to Goldman Sachs, one analyst? All right, no one's putting it in. Can't say I blame you. It was pretty interesting because I thought for sure it would be Meta and Google. It's Google and Apple. And it's pretty interesting because the whole premise comes down to cash on hand. If we go into a big trade war, cash on hand is going to save these companies that have the opportunity where they don't need to borrow. Also for growth, there's some great information here on where the growth is. Again, I would probably take Apple out and move Meta into this position. That would be how I would trade it. But I'm giving you guys the information so that you can make your own choice. Very interesting article. He looks like he goes to Disney, to be honest. There's a little racial profiling. He actually looks like my brother. And my brother and his kids go to Disney like it's the most best place in the world to go to. There's my brother. He's not, but he looks like it. Very interesting article on where Disney is putting more money into their theme parks. I like this group and what they do. And these, just so you know, I'm getting these stocks from Tip Ranks. I really like the way that they give the opportunity for you just to look at what their numbers are and make the judgment call for yourself. So I do spend some time with Tip Ranks. It has been rather fun. But if you're following the money, some pretty interesting ideas on where Disney can go in the next 6 months. And I like, again, that it's all listed right in here for you. All right. You can tell I didn't do a great job of getting these prepared. Very interesting article on our AI movement in the Middle East. I never thought of this article as having this this idea, but here's the thought process as I read through the article. Why wouldn't we go to the richest people in the world? The richest people in the world are the Middle Easterners that have billions upon billions upon billions of dollars. Why wouldn't that be the first place that if we're going to modernize, let's modernize it so that they're on our side? Yes, I'm not one that believes that we can fix the centuries of killings that have happened over there. That is not what I'm saying. What I am saying is, why not be in an area where we can benefit with our allies in the Middle East? And then last but not least, I did find it funny that truly a court that I've never heard of went and they struck down the tariffs that Trump did. Again, I find it interesting. It's a New York type of district court, but it's not a U.S. district court. It's an international trading court. And obviously the Court of Appeal struck it down pretty quickly and pretty easily. I never thought a off the wall district court would have had more, I don't know, more power than our Congress, our president, or our Senate. So a very interesting article here. And then obviously Trump tariffs reinstated by an appeals court that basically said yes, they don't they don't have that ability. The judicial court does not work that way, nor has it worked that way. So with that said, obviously I didn't do a great job of getting this ready. That's basically what I have for you by way of news today. Oh, and last but not least, I had to put this one in here. Sorry, guys. Jamie Dimon calls U.S. should stockpile more bullets and guns than Bitcoin. Obviously, he's not a Bitcoin, nor would I be buying the Trump coin. But I had to absolutely love this one. That Jamie Dimon says, hey, more bullets and more guns. People should be stockpiling bullets. Protection. It's an amazing article. It's not that he's 100% serious, but he's just letting you know it's more important than buying Bitcoin or Trump coins or things like that. So a very interesting article by Jamie Dimon. Not to mention, it just struck me absolutely hilarious. A smile has not left my face. With that said, any questions you guys have about this upcoming week? Yes, Meta did move another $23 today. Thank you, Dave. I should have said that. Meta did move another $23 and still has over $100 to get back to highs. Wonder if I'm lying there. Let's fact check me. Let's see where it came up to. 540 I thought was their highs. Meta 670. So that is not true. Another $70. Over $70 to get back to its highs. So yes, for the 700-ish wheat calls that we took off, short calls, and possibly already dollar cost averaged, we are looking at possibly putting some short calls back on, especially if we can create a risk-free trade. So we may add the $800 short calls back on if the numbers work out that we can create a risk-free trade. So some of you asked, why haven't we done more protecting on it? Good comment, good question. We just haven't. We just haven't because it hasn't warranted it yet for us. It keeps going up. So if it keeps going up, I'm not interested in capping it. It seriously just broke its trend line. I know some of you talked about Kevin said a double top, according to FinViz. Yay for waiting one more day. Thursday, Friday were kind of brutal. Wednesday, even worse the last week. You know, you're like, hey, it's hitting its top. It's hitting its top. Little bit of patience, 2 to 4 days to validate a trend. One day does not validate a trend. So if you see something for one day, don't freak out. Let the trend come to you. Let it prove itself. Don't try to outguess the market. Were we thinking about possibly adding those short calls? Of course we were. No questions asked. We were thinking about it. But we don't want to cap something when it has such a run to the upside right now. So we're just using patience. All right. Any other questions? Trying to stall for you guys for just a little bit. But if not, I appreciate you guys being here. I do hope this helps you so that you can see what we're trying to do with your money, how we're protecting, directions we're going. For one of the two of you that sent me the polite, hey, Kevin, just thought you should be made aware of it. Thank you very much. For the other one of you that thought you knew it all, please, please do your own due diligence. Do your due diligence, find out what's really going on. Just because you read it, it doesn't make it true. So I'd prefer a little bit politer way to introduce something you saw on Sunday. All right, thanks guys. Appreciate your time. Look forward to seeing you next week. Have a wonderful week, and I'll talk to you then. Bye-bye.